Quite a few Americans don't have the attitude to save more, or much less, invest. However, you must save for your retirement. If you want to live that life free of hustle and stress, you need to make plans for the future. In today's video, I will teach you how to save money and invest in preparation for your retirement. I'm sure you don't want to miss what number one is, so stay tuned till the end. Don't forget to like this video and subscribe to the channel. Number 9. Shop your insurance around. Car insurance is one product that varies greatly in price. One company may charge $50 per month for the same coverage, while another may charge $250. That is why it is critical to shop around regularly, maybe once a year. In addition to any other discounts that may be available, there are usually options for discounts for bundles such as homeowners and renters or several vehicles. Examine your taxes and coverage to ensure you're not paying for more coverage than you require. You have the option for shopping for the best product online or contacting an agent that will price a list of firms for you. Number 8. Take advantage of credit card rewards. Taking advantage of cashback credit cards can add up over time. While somewhat controversial, credit cards can be used wisely, provided you don't carry a balance or purchase things you wouldn't otherwise buy in cash. You may get a cashback card for dining out, grocery shopping, gas, business spending, and more, depending on your normal expenses. Most credit card providers allow you to deposit your rewards directly into another bank or investment account once they have been accrued. If you spend $30,000 per year and get 2% cash back on those expenses, you'll save around $50 every month. It won't make you rich, but it's extra money for basically nothing, and if invested properly, it can pay off handsomely. Look for credit cards that give you a $200, $300, or $500 welcome bonus. Of course, the idea is to only use credit cards for purchases that you would have made otherwise. Number 7. Claim the entire employer match. A 401k plan, often known as an employer-sponsored retirement plan, is a terrific way to get some free money. If your company offers a 401k, they will likely match your contributions. In most cases, your company will match 50% of your contributions up to 6% of your salary. If you make $50,000 per year, your company will pay $1,500 to your retirement fund each year. By failing to take advantage of these benefits, you're essentially handing over a portion of your salary to your employer. Contributions to a 401k plan are also tax deductible, lowering the amount you owe to the IRS for the year. Number 6. Use coupons and invest the difference right away. Coupons can help you save money both online and in store. Don't just throw away the money you save when you employ them to cut expenditures. Put the money into a savings or investing account right away so it can start working for you. Also, if you shop about and buy something online, there are likely to be several sellers that have the same item, and many of them will price match. Only use coupons and items that you would be purchasing anyway. Too often, people make unnecessary purchases simply because they have a coupon. You can also take advantage of those discounts to purchase extra items that you need shortly, sparing you from full price. Talking about the right investment, allow me to introduce you to one of the most dependable ways to make money without ever leaving your house. This autopilot feature is one of the most effective, ensuring a quick and easy cash out with every click. To get started, just click on the link in the description box below and activate automated online stores that generate $70, $80, and $500 plus per day on autopilot. How sizzling is that? But that's not all. This new Godzilla-like opportunity is bigger than the almighty Google itself. Currently, as we speak, it is growing at a vertiginous pace, and it doesn't show signs of slowing down yet. The more clicks and purchases you get on your unique link, the more money you make. How about that for a side business? But remember, this tool is only open for the first 30 people to click on it. So after watching this video, scroll down to the description below to start making money. Number 5. Reduce expense ratios. When it comes to investing, fees are often unavoidable, but that doesn't mean you have to overpay. Optimize your retirement account such that it is invested in low expense ratio items. If your 401k doesn't offer low-cost options, try rolling it into an IRA if possible. There's no reason to pay high expenditure ratios, say above 0.5% in an individual retirement plan, because the possibilities are almost limitless. Reduced cost will make a significant difference in your portfolio, particularly if it increases to 6 and 7 figures. If you're one of those people who doesn't think twice about paying fees, conduct a simple calculation to see how much you're paying. Number 4, automate bills for a discount. Some companies will provide a discount or special bonus offer when you set up automatic billing online. This not only reduces paper waste for those who receive bills in the mail, but it also frees up time and energy which would otherwise be spent paying bills. Insurance companies sometimes knock up to 10% off your premium for paying for the policy in full instead of paying monthly. Phone providers also give discounts when you set up automatic billing. Banks often give discounts for loan payments that are automatic. Sometimes it needs to be connected to a bank account instead of a credit card, but that only takes a couple of minutes. Companies have various policies on discounts for this, but some of them are well worth it. Saving 10% on your insurance is a guaranteed 10% return, and you'll also eliminate the risk of being charged a late fee for forgetting to make a payment. Number 3, refinance loans. With loan rates as low as they are, refinancing your home or car to get a lower rate may be worth your time. The difference in monthly payments between 5% and a 3% interest rate on a $300,000 loan is about $350. Keep in mind that refinancing has been charged, and those costs vary, so be sure the monthly savings outweigh the additional fees. Consider this: if you've had a 30-year mortgage for 7 years, then refinance it into another 30-year mortgage, you've increased your debt-to-income ratio, because most lenders only give 15 or 30-year terms. Your new mortgage will be for 30 years after the refinance, which will increase the total cost. Instead, try to work out a deal with your bank to preserve the original due date. Number 2, adjust tax withholdings. Receiving a tax refund is a pleasant feeling, and in many situations, it appears as if you have received a bonus check from the government, when in fact you have borrowed from Uncle Sam that money for the year to use for free without interest. Ideally, you should withhold only the amount you will owe in taxes for the year. You get to use that money by paying off debt or putting it to work investing if you keep the money throughout the year. So you don't get a refund. Because receiving that check in the spring feels like a small windfall, you're more inclined to spend it on a spring vacation or a pricey new item. When you think that the tax refund isn't something exciting, but rather money you contributed to the government for the entire year, and you could earn interest on it, you tend to have a different perspective. Number 1, ask for a raise. This is one suggestion that might increase your annual savings. Employers will only pay as much as is necessary to keep their jobs, and will sell them raises as a bonus. Employers frequently pay new workers more for the same task than their current experienced employees. Request a raise if you're not getting paid what you're worth. It's unlikely that your boss will come to you and raise your compensation without asking. Therefore, it's up to you to prove your worth. For the same position, new employees earning more than a veteran is unfair and should not be tolerated, especially as high-quality employees are typically compensated more for their experience and devotion. Examine the job market and think about jumping ship if you're unable to agree on a reasonable wage. Because you were previously living on a lesser income, the hassle of changing jobs will be worth it for a 5, 10, or 15% raise in pay, and that extra money may be easily channeled towards investment. Leave a big thumbs up on this video if it's been helpful. And if you're new to our channel, subscribe and turn on your post notification. See you in the next video.